What's up, guys? Wanted to do this really short video for you and go over why I feel like now is the best opportunity of my real estate investing career to get involved in real estate. And I wanted to kind of share that with you. So, as you guys know, founder, CEO of Bell Capital, and we are constantly raising capital, going over, keeping our relationships with you guys about investing with us, whether now or in the future. But here's what's happening right now. So, the number one reason why I think now is the perfect time is we've been talking about it a lot. There's a $2 trillion debt maturity that's coming in the commercial real estate sector between now and the next 3 years. That is happening, folks. So, some of the best multifamily commercial real estate on the planet has debt that's associated with it, which is that's our investment strategy, is to go after these sellers that are we call them distressed sellers. So they're distressed sellers, not distressed assets. These are some of the best locations, the best properties, best in class real estate that may be bought in 2020, 21, that their debt is now maturing and they have to sell this property or they got to recap it. Recap meaning recapitalize. What's going to happen is they're going to go back to the debt market. The rates are not where they need to be. They're going to have to sell and they're going to have to sell at a discount. That's just kind of the game, right? When you know this game, I'm not talking about your mommy and daddy's single family house or your residential property or an eightplex. I'm talking about big institutional quality, great assets, great locations that are tied to the debt market. That is happening. Right now, that's all anybody's ever talking about. That's why this is so important. So, $2 trillion coming due over the next 3 years. Got to take advantage of that. That's number one. Number two, Wash is coming into the market. So, there's going to be a new Fed chair taking over. And anytime there's a new king, he instills a new law. And usually what happens is they look at what's happened in the past, what is going to actually spike the market. Right now, spiking the market can only be one or two things: raise the interest rates or lower them. If he raises the interest rates, people are going to go nuts. If he lowers the interest rates, people are going to go nuts. So odds are, with the way everything's happening with the war, oil prices, Bitcoin being down, Bitcoin going back up, AI, everyone's talking about this AI bubble. The private credit market is going nuts right now. So far as people are concerned about it, Blackstone's not. They're one of the largest investors in private credit. So they're not worried about this stuff, but you should be, because you have to ask yourself, where's the money going to go? And if the interest rates come down and people flood the market that's been sitting on the sidelines, what's going to happen to values of real assets? They're going to go up, right? That's just kind of what it is. And guaranteed, as soon as those rates go down, I tell people this all the time. I know I'm talking fast because I get excited about this kind of stuff. Lowering the interest rates and letting people have access to more debt is another inflationary activity. That is another way to print money because people can borrow more money at less cost, right? Cost capital. So as that happens, you will get the opportunity to jump on board in this next regime change, because it is changing no matter what. It's coming up, I think, this week, but it is happening. I think they voted today, and it is moving majorly in his way. It's going to happen anyways. He's a President Trump guy. Trump wants him in. He's a billionaire investor as well. So he understands, as it relates to capital, how it works, why it's necessary. You can't have somebody in these seats that doesn't understand the flow of capital in and out and being able to make this market move. Even like right here, they're talking about the 10-year treasury being 4.4. So that's number two. Number three is the tax benefits. The big, beautiful bill, right? From Donald Trump brought back 100% depreciation on assets. So let's say you bought a property for $100 million. 9 times out of 10, if it's a properties we look at, you would probably be able to write 100%, or I usually say roughly about 33% of whatever it is that you pay for that property off. And if you put down 40%, 35%, then you are depreciating all of the money, that all of the property 100%, but you're probably not going to be paying taxes on your cash flow on that property, on the cash flow that you get from the property for probably 3, 4 years, right? That is beautiful. Reason why is because the tax benefits are the only reason why you would invest in a real asset like real estate anyways. People get into real estate because they make a lot of money in their business. They need the tax write-offs, and it's almost like the tax code is written for real estate. Now it was going away. Donald Trump, love him or hate him, brought that bill back. So it doesn't just help real estate. It helps other people that have that need to do R&D, like dentists, people who own jets and private jets and things like that, corporations. It helps a lot of people. That is still in there. So the fact that that has come back between the Fed chair, the trillions of dollars worth of debt maturing, and the tax benefits that have been now put back into play while Donald Trump is here, that's huge, right? That is the reason why you get involved right now. So the other thing I already talked about the lowering of rates because the Fed chair, the change of power, right? But as these rates come down, the cost of capital is going to be a lot less. Deals are going to start moving. All this capital that you see sitting off to the sidelines, a lot of these institutions that can't play, but they are sitting on a war chest of money, they're going to start dumping that money back. Capital has to get placed and go someplace because money needs a return and return needs money. So that the interest rate will be lower. That money is going to start to move the market. So now will be the time between now, I would say probably within the next 24 months, between 26, 27, and probably the end of 27. This will be the opportunity to take advantage of great real estate. And if your money is sitting in the bank earning nothing, you're getting beat on it. You need to get your money out of the banks and enroll it into a real asset because now will be the time to do that over this next 12 to 18 months.